So Alex asked the question why a company like Under Armour has two symbols, and why is it they trade exactly the same? There's a couple of reasons why this occurs, and one of the reasons is, and probably the case with UA and UAA, is that there's a significant cost to companies for having shareholders. And having shareholders come doing mailouts and coming to meetings and all these kind of things. So quite often, or sometimes what a company do then is they'll have two classes of stock, Class A, Class B. UA is probably the Class A, and it's probably has less shares outstanding, but it has voting rights. So if original owners want to try and keep control of the company, they'll have a Class A voting, which they'll control most of. And if we look at this, let's have a look and see these two stocks. You can see the difference in trading here. 7.3 million traded on UA and 19.7 million traded on UAA. So probably what's happened is the owners, or the people that first put the deal together, want to keep control of the stock, but need also to raise money to move things ahead. So institutional players, they'd want to be shareholders, Class A, where they've got a right to vote in the matters of the company, and so there'd be less shares outstanding in here, but they would have the same rights probably as far as distribution goes of assets. So these ones would trade exactly the same price or close to the same price, depending on what the articles of incorporation talk about the rights of the different shares. So the owners might want to keep control of it, so they own the biggest block of voting shares. And then they sell the rest to people that don't really care if they go to a meeting or not, and of the non-voting shares. And this is just speculation on these two. I haven't actually looked this up, but that's probably the case if you look at their filings. And so by virtue of that, this is a bigger float, and so it's more liquid. But if the underlying asset is exactly the same, then their prices will trade very close together. If the book value of one share of UA is the same book value of one share of UAA, then they'll trade at around the same price. This is trading has more volume. You might not have any ability to vote your stock, but you don't care because you're just trading it, or you're not going to the annual meetings. You don't care. Here, institutions may care, and they'll be big institutional holders in this one, and this will be more retail. So that's one of the strategies. Another strategy that companies have, and this would be the Berkshire Hathaway. I forget what the symbol is. Anybody know the symbol for Berkshire Hathaway? I don't know how to look it up on this. BRK. Okay, thanks. Yeah, BRK. Another reason that Berkshire, for instance, a company like Berkshire Hathaway, and can you imagine, this is just a different note, in 1982, this is when I was started out as a broker in the investment industry, this stock was trading at $1,200. Now $336,000. And I thought $1,200 was expensive. mind you, they hadn't even invented, they hadn't even discovered DNA back then. So BRK is their Class A, and BRKB is the Class B, obviously. And I think this is the voting stock, and this is the non-voting stock. And this one also has many more shares outstanding in it. And so what they do is, because who can afford to buy one share of a $330,000 stock unless you're a huge institution? So they broke it off into two parts, and so that retail investors and smaller traders and stuff could trade or own Berkshire and own a piece of the pie. So it has probably way more shares outstanding, or different asset allocations, on breakup, to give it a value of 200 versus 300,000. So that's the other reason why you have different classes of stock. So the one reason is to keep control of the company for initial owners, and two, the other one is to allow retail buyers to trade the stock when they don't split their stock at all. They keep it at a huge number.